Hey traders, welcome back to Forex SPV. It's another Sunday and it's time for us to prepare for the upcoming trading. Now, in this week, uh, I'll be concentrating on 4 pairs to analyze in this video, and I'll be looking at USDCAD, EURUSD. I'll be also looking at gold and GBPCAD. So I'll give you my analysis, what key levels to look at. I'll give you my outlook and basically what to watch out for in the markets. So if you're new here, this is Forex SPV channel, and don't forget to subscribe and turn on notification so that you'll be updated with our weekly analysis and do not miss. Okay, so let's dive in and into the charts and see what opportunities we can spot on the coming week. First up, we have USDCAD, and this pair has been consolidating for at least 6 weeks. So for the past 6 weeks. So if you go to the hour 4 chart, we have this period separator, which is a 1 week range. So if you look at it, we have 1, 2, 3, 4, 5, 6. So at least 6 weeks of consolidation. We have a zone here at this price level and a zone here at this price level. And price has been forming what we call a rectangle pattern here, which is a consolidation before it continues with the trend. Okay, so let me load the template again, and we'll do analysis using the MQP alloy strategy, and we'll start with the monthly time frame. In the monthly time frame, we'll be looking at the key support and resistance level. And if you use the line chart here, you'll be seeing precisely where price has reversed. So the key support and resistance levels that are close to the current market price. So we have this level here at 1.40493, and we have this level up here where we have the highest of the weeks. So you can see here, price did break this area here of resistance, and now it has become a support, and price is now moving up, finding the next area of resistance, which is at this level here. So this is a bullish market structure. This means the market is still bullish based on the monthly time frame. And on the weekly, we can see here we had an area of support forming. And once this area of support was formed, we had this key level here. And the market did break it. You can see a little retest and then a continuation there. Another retest coming to the order block here, and then we had a continuation. Here we had a bit of consolidation, and this is what was reflected on the hour 4 chart. You can see a long-term consolidation, so we have at least 6 weeks here. And you can see a continuation going up. So one of the continuation patterns that I usually teach is the rectangle, the rectangle pattern here. And this was it. So this was a rectangle pattern showing that this is simply a consolidation. The market will continue moving up. And the weekly, the monthly time frame are also telling us that the market is still going up. So if you look at the higher time frame buyers, we have a bullish market structure, and here we have a breakout on this key resistance level here, and now we are still going up. Okay, so I can delete this. So this is the R4. The TDI on the R4, simply consolidation. Okay, it's simply consolidating around the level middle here, level 50, showing that the market was at rest. And we had a bearish butterfly here, which did not have an effect. The market still continued up. So it was simply a retracement here and then a continuation going up. And you can see here on the hour chart. So on Thursday and Friday, the market was quite rough. And this here was a result of Canadian dollar. So all card pairs had this strong candle which formed a wick later on. So here you can simply view it very well in the 15-minute chart. So if you go to any other card pair, if you look at the card index, basically you can see it. So and the card index card was selling, and the result is USDCAD did buy, the same for EURUCAD, pound cards, and card share for selling. So since the market is still going up, we'll be looking at area where the market has set his peak reset. Okay, so if you look at it, we have this level here, and the market started moving slowly here, going up. So we can call this an area where the peak reset has been formed. And our ADR value is around 111. So if you draw our ADR tables, so 111, so we have around that 110, 111. So that's the first box from a duplicate. So that's the second and the third. So in situations where the market is moving like this, where you cannot clearly see or note the levels, we will rely on the ADR boxes. We will rely on the ADR for the market maker cycle. So here you can clearly see that the market is still going up. And right here, the market did come back to the 200 EMA. And this is an area where the market usually forms peak reset, so around 800 or 200 EMA. So it has come back again at this point, and we still have a very good continuation going up. So we can simply look at where the market can have a retracement before we continue going up. So we can look at key previous day high, previous day low, or previous day. We can have the weekly highs, the weekly lows, the session highs, session lows. Those are the key levels where the market can retrace and then continue going up. So here we have, this is the low for the London session on Friday. That's a key area here. This is also a key area, the low for the day, but it's too far, I can say. And here we have, this is the Asian session low. So these are the key areas if you are looking for the market to retrace. This here is an area of support, and this is also an area of support. Because the support area, a natural support or a natural resistance can be a previous day high, previous day low, previous day, previous New York session high, New York session low, or London high, London low. So any previous high or low that has been set is basically an area of support or a resistance, and there's a key level for the market maker to find before continuing going up. So if the market maker were to do a stop hunt, we would expect him to come maybe at this area and then continue going up. But also, if it breaks this area, we would expect him to find this area. So when you go to the market next week, you'll be looking for a retracement and the continuation going up. So you'll be looking at a continuation pattern for us to buy. And that is it for USDCAD. Now let us go to gold. So let's find gold here. So we have gold, Saudi USD. So gold is a commodity, and as a commodity, it has its own unique characteristics, like forming new highs, like what it's doing here. In January, we had a new high set uh, on gold. So it has set a new high at around 18.17. That's a new high for gold. So it's called a safe haven for many investors in the world, and these financial institutions, investment managers, etc. So people view it as a safe haven, and they expect for gold demand to continue being the same, to increase, and basically price would rise out of it. So as a result, we have these new highs forming each and every day. So if you look at it, we have an area of support just below there. So we have started with the monthly time frame. We go to the weekly, and on the weekly we still have a movement going up. So on the daily time frame, we can draw another one there. So we have an area of support formed here. If you look at the levels here, we have like a first level, a second level, a third level, but then a continuation going up again. And we can see the market here, see this candle that has closed here. This candle has left a wick that needs to be filled. So I would expect for the market on Monday, tomorrow, to be bullish. Yeah? So on our fall, we have a bearish crab here. It's like a bearish butterfly. It's like a bearish butterfly where there's a new high and it has taken it out, and then we have a liquidity pool area here. We have raided it, so a retracement is imminent. And if you look at the CDI, we have like an area of support here on it, but you can see here if the movement has started here. If you look at it, the movement started here going up. If you look at the levels on the TDI, we have the first level, the second level, and we are going to go for the third level before we go down. Okay, so on the how-on chart is where we look at the market maker cycle. So gold, when it was at this point here, and this was simply last week, when it was at this point on Monday, I took a sell on gold here. So you can see this was like a head and shoulder pattern here. So we had a shoulder, a head, and a shoulder here. And I took a trade around this point here to this point. So it was a beautiful sell on gold. And on the next day, it's where it formed a reset. So we can go and form our ADR boxes. So our ADR is around 296 here. For gold, so 296. Go to 295. So ADR is simply an average. So that's ADR times 2, and we are up for ADR times 3. So it's almost there. We can see we have the first level, the second level, which is very long, coming to break this high. And simply because we had a liquidity pool area here and the market has grabbed liquidity, we can have a retracement before we continue going up. And that retracement would have to come to form another peak reset. That peak reset may be formed at this level here, where the 200 EMA will also be at this level here, which is the area of our peak preset. So I will draw line here to depict that we would have a peak formation high. So we simply expect for a move going up because of the wick that we have seen on the daily time frame, and there we go. And the forming that peak, we would expect for it to come as a reset and then continue going up. Okay, so because on the weekly and monthly time frame we still have a bullish trend, and that's how I analyze gold. Okay, now let us go to Euro USD, and as you know, Euro USD is the most traded forex pair in the world. Since the inauguration of the new president of the United States of America, President Donald Trump, we have seen this dollar pairs has been reacting strongly to some of the economic data that have been coming out, and we had the FOMC meeting last week. The Fed interest rate was out. Okay, so let's start with the monthly time frame. And on the monthly time frame, we are looking at the key areas of support and resistance that are close to the current market price. So we use the line chart here. So the current market price is right here. You can see we have an area of resistance just above it, and a support way below. Okay, so if you look at it, you can simply see that after forming this area of resistance here, we are having a strong downtrend there. We are having a strong downtrend. We have an order block right here. Okay. But we have not confirmed if this reaction here would make EURUSD change its direction. So until this point, I would still be expecting for the market to continue selling. And if you look at the weekly, look at how last week has been trading. We have another order block here that is not touched yet. Let me look at the daily time frame. The order block here. Therefore, I think we can see a mitigation block here. We have this new low, and then the market did not come to it. So our mitigation block will be around this area here, which is close to, I think it's the same level as the order block on the daily time frame. Yes. So if this market will continue to sell, we would expect it to come to this level here. We expect it to come to this level. Therefore, time frame. So the TDI is telling us we will continue to sell. We are around the level. This level middle. Yes, this is the level middle. We are around the level middle, and we'll continue selling to reach the level low. And here we have a very good peak formation high. So if you look at it, we had, this is the Monday false move, and then we had all this week going down. So if you look at the weekly cycle, so let's draw the ADR boxes here. The ADR is around 83. So 83, so that's ADR times 1, ADR times 2, the ADR 10-3. You can see our ADR 10-3 is very at the point where we expect for the market to end its movements. And now we need to look at where the market might retrace before going down. Okay, so we have around these EMAs. We have around these EMAs. This is the London session high. We have, this is the high of the day, which is also the New York session high. So we also have the 200 EMA here. Most probably it will go around the 200 EMA before going down, which is 50 EMA on the hour time frame. So I would anticipate for that move to occur. Okay. So that is it on EURUSD. So our final pair will be GBPCAD. This pair has been volatile recently, and we have been following it. I've been sharing the charts with you, the analysis and all that. I think since it was forming this peak here. Okay, so let me load the template again. So let's look at GBPCAD. So we have a very strong upward movement. Let's see if we would have a continuation here or a pullback. So let's start with the monthly time frame. So on the monthly time frame, again, we'll be looking at key support and resistance levels here that are close to the current market price. So you can see here, the current market price is here. So it's very easy for you to actually see these levels if you have experience in trading the MQP strategy. It is sharp. So you can see here on the monthly time frame, this is how January is. January was. This is how January was. You can see it has ended up with a doji, which has a long tail to the bottom here. And you can see we still expect for the market to go up here. There is no vivid reasons for us to expect for the market to go down. Even the weekly candle, how it ended, it's like this one. It has a week, so we expect for the next week to be bullish, just as how it happened here. So our market structure is still bullish. So this is the daily time frame. This is where we had our reversal, which is just below this low. So we had a liquidity pool area down here, and then after raiding the liquidity pool area, we had this good reversal going up, our first retracement, but this was around this area where it was forming a peak, so we wouldn't be considering it much. But this here was a retracement, but then a quick reset. So if price touches the 5 EMA and continues going up, that's a quick reset. Okay, and this 5 EMA should be off the daily time frame. So therefore, time frame is simply when we look at the TD high here, we can see that the market started this movement here. We had very good move up to this point. We had a reset, another very good move up to the level high, and the market actually TDI started selling here. So the TDI started selling before the market was actually selling. So what does this indicate? This indicates we should be expecting for a stronger downtrend than what we have anticipated from here. So we should expect for the market to perhaps go up again and then have a stronger downtrend. Okay, so we had our peak here. We had our first reset here, and this here is our second reset. Okay, so our peak levels 1, 2, 3. Another peak reset. The movement was sharp 1, 2, 3. Here we had like a head and shoulder pattern, but then a quick reset. So the market on the other one did not come back to the 200 EMA, but rather it ended up on this half point level here. So we have a half point price here to around 1.78750. That's where they formed the reset, and mostly we would expect for the peaks and peak reset to occur around this half points or the hesitation zone, so these levels here. Okay, so if you draw ADR boxes from this point, ADR is around 125, and I think this ADR has increased because of this strong movement here that has occurred on now Thursday here, and this occurred on all card pairs. We have seen it on USDCAD, and now we have seen it on GBPCAD. So 125. Okay, so let's go there. That's ADR times 1, ADR times 2, and ADR times 3. So what to anticipate here? So we're looking at a level where the market might retrace before continuing going up. So we have this is the previous day London session low. So during session changeover, oh, this is too close. You can have another one around this low. So the anticipate for a move to this point and then a continuation going up. Okay, so that's how I anticipate for GBPCAD. And if we look at our anticipation on USDCAD, it's almost the same. I think it's the same as the GBPCAD simply because these are correlated pairs and they have positive correlation. So we would expect most of the time for them to have movement in the same direction. So I think that's it for today. Remember, the markets can change quickly. So you need to be careful. You need to manage your risk and adapt when they change. So we usually do analysis, but the market knows best. So if the market dynamics change, you need to adapt and change with it. Okay. So let me know in the comments which pair are you most interested in trading this week. And I would like to invite all of you to join us in any of our services. You can join us on our mentorship programs, on our signal programs. And for our signals, you get real-time trade updates, okay? Don't forget to like, share, and subscribe for more weekly market breakdown. Thank you for listening and have a profitable week ahead of you.